The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 17th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be a pioneer of our future versus a prisoner of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I can make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Right now is just fine. 877-927-6648. Look, if you can't dial in, no reason to not let your fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tiger's Den. Well, hey, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 238 points, 26,031 is the print. S&P's up 20 points, 2796. NASDAQ 100 up 49 points. Russell up 9.5. Semis are the big caboose out here, up over 2%, up 26 buckaroonies. You've got the spot volatility index down 2.5%, trading on 1137. Gold is flat. Silver's down 4 cents. Light sweet crude up 31 pennies. The March contract, I knew I could get it up. For natural gas up 2 3/10% out there. Leading the charge, you got Priceline up 24 bucks. Trade at 1943. Juno Therapeutics up 48% at 22 buckaroonies. That's a nice move. Amplify ETF, whatever that is, BLOK is the ticker symbol. Yeah, it must be an ETF that came out today. It's up 1,908%. Coherent up 15 bucks. Bluebird Bio up 12. Azima Holdings up 11 bucks. The downside it is Bitcoin Investment Trust off 155 bucks. Amazon down 7. Granger down 7. Goldman Sachs off 6. That's 2.5%. Imagine if Goldman Sachs were trading higher. What that would do to the Dow. You think we'd be up 240? No, we'd be up 300 in a heartbeat out there. But it's not up, and therefore it's not. When I say it's not up, I mean Goldman Sachs, and therefore the Dow is only up 240 point-a-roonies. Now, let's see. We did have a couple of questions that came in before we went on there, so we want to get to those first. The first one coming in from Aaron. Aaron R. says, bought CBI, I think that's Chicago Bridge, if I'm not mistaken, as a trade at 1790. First, let's go to our 3 time frame charts out here. Let's go ahead and place in the ticker symbol, CBI. It's going to tell us, yes, Chicago Bridge and Iron. And I'm going to also punch it in on my other chart here. Now, the chart that you guys are looking at, TigerTV or Inside the Den, 3 time frame charts out there, daily, weekly, monthly. And what you have the advantage of on these charts is seeing where the TAS market profiles. Kind of hidden, not so hidden to you, levels of support and resistance. Very first thing that we notice is prices above the daily top of the box, the weekly top of the box, and that means headed to the monthly top of the box. So 2169 is a price target for you to be looking at. Doesn't mean that's the final target. It's the next area of resistance that shows up on our chart out here. What Aaron was looking for, bought it as a trade at 1790, so that tells us this is a short-term potential holding. Could you please look at it today? Yep. Look at for a sell target. Geez, I didn't even read the whole thing. I don't know that 2169 is your sell target. I'm hoping 2308 gets tested. Okay, well, then you're looking for something higher. Maybe, what is it you're looking for, 2308? Is it this weekly? Top of the box it is, yeah. So you're looking at that high volume candle session from June 26, 2308's a high. The low is 1389. So you got wide price spread. You do have big volume there. I don't know. You know, that came off the bottom and it didn't hold, so that was kind of a dangerous thing out here. Here's what we can do. Let's just see if on a weekly basis we have any type of confirmed A to B equals CD pattern out here. And this is where that'd be a struggle. So from a weekly perspective, we're looking at the week of December 11, 2017, 13 million shares, and last week passed with 14. So, yeah, here is a version, right? Not a version of the truth. Yeah, but it's a version of the truth out here. Here's a version of an A to B equals CD. The daily's probably going to distinguish itself more from that pattern, but this says 24 to 26 buckaroonies. You're trying for 23, so that looks good. In other words, you've passed a swing point with volume out there. You're trading into into that high volume week, whatever in the heck went on there. Let's go take a look at the daily chart for you. And on the daily chart, so I would say, Aaron, not so fast. Yeah, I would say not so fast. If I were now looking at this chart as we've opened it up, we've opened up the kimono here, my target would actually be the gap to the downside. The gap to the downside that I'm referring to out here is from the trading session of May 9th. May 9th, this thing had gapped down with a volume of 11.6 million, so 2742 out here. What we can see from this chart, if we were going to draw an A to B equals CD and we use the exact same candle session for our B and C point, that's that high volume day from October 31st with the 11 million shares, there's no way we're over that with volume out here. We're not. It's 11 million shares. We've passed through that area. So my eye says, hey, I think you got 23 in the bag as we speak right now. 2742 is more likely the place. I think you can take a look at Chicago Bridge as more than a trade. Look at this consolidation, in essence, that this thing had been in for a period of time, probably since September, and it's breaking out above that consolidation area. I like that. I like that gap to the downside out here. I love the fact that you've got a price oscillator above zero. I love the fact that you have a rising price oscillator, meaning that price is trading above Stevie's red line at 1840. So stay the course and always keep a stop in place. Thanks for writing. That was for Aaron. We also had another question that came in here. Let's go to it. I'll try maybe not to spend as much time on that because some of you kind of say, hey, God, you're so thorough. But Robert writes in, he says, I'm trying to understand why the VIX greater than 10% daily rate of change from yesterday is so far having no effect on the market today. And it's still well above the 50 displaced moving average or daily moving average. I don't remember seeing this happen before. I've got to think this through as we come into this break. This was written at 12:40. Now, Robert, you have me confused. What do you mean it's not having an effect on the market? So I've got to think that through or ask the question, did I not clearly communicate what a VIX one-day rate of change is? Hey, write into me during these next few minutes if I'm kind of missing something here. The S&P is up 0.7% or 20%. I mean, 20 bucks. That's an effect. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're pondering the question Robert wrote in. Thanks for writing, by the way. And I think I've confused Robert, so I'm going to clear, and maybe some of you out there, so we're going to clear that up right this second. And Robert, and all of you out there, when the spot volatility index has a one-day rate of change, meaning we're comparing yesterday's close to the day before's close, yesterday's close to today's close, when you have a one-day rate of change greater than 10%, greater than positive 10% out there, what that typically, and when I say typically, it's not 100%. It's like 90%. It's such a high percentage out there that you don't want to ignore it. You just don't want to ignore it out there. It certainly helps you to identify stops, I suppose, or things of that sort. But getting back to this, what occurs, my study goes back to the days when the spot volatility index started. So that's how far back my studies go. It used to be about an 80% probability when we saw that. Over the last several years, it's been in the 90%. Do I keep track of every? No. But here's a chart. Go do the work yourself and say, Steve, it's a bunch of BS. Actually, I mean, before Steve, I didn't realize this is all that means. But here's the reality. When you see a day, and like yesterday, even with price moving off of the highs, even being at all-time highs out there, and you have a one-day rate of change greater than positive 10% out there, you're going to see a bounce or bottom inside the market. Now, you don't know if it's a bounce or bottom, but hey, what's our trend been like? A pretty good idea that it's another bottom out there. Yeah, these pullbacks. So if you're a bear, here's the deal. You do not want to see those huge spikes. I know you get all giddy, and you get all giddy up, and you just pile on. You want to pile off if you were lucky enough to take that short whenever you did, and you see that end-of-day close of greater than plus 10%. So, Robert, it's doing its magic. It's all you want to just keep it simple. Bounce or bottom within 24 hours, usually starts relatively soon after the market close out there. You can apply this with other tools that you use out here, but it's a great tool, and it's had a quite frankly, it's done its magic out there. I have it listed as a yellow arrow right now because I've had to go back and try to find how many instances. Now, I didn't go back all the way through the history. I just didn't have the time. But over the last couple of years, I went back and looked for coming off of the high coming off of the high. How many days have we, or at the highs, all-time highs, how many times have we had a spot volatility index one-day rate of change like that? It's not often. Last time, quite frankly, it led to higher prices. You know what it looks like this time? Might be the same thing. Now, it's dealing with the S&P, and so we can come back and take a look at the ES Mini out here. And so we're kind of in an interesting stage right now. If we take a look at the low that came in here yesterday, 30-minute chart, we can see if we do the old wave count that we're either in wave number 1A on my chart or 7G on my chart. I don't know which it is. I do know this. Here's the all-time high that was formed yesterday at 10 o'clock. Makes a nice Nike swoosh to the downside. Then we make a retracement up into about the open today, cash open, at 9:30. Makes a move lower. It's a higher low. This pattern here, okay, so I don't know whether anybody's long or short. This pattern here, if price gets above the all-time high, it says we are going much higher. That is just this is a significant bottoming pattern that is out here. We take a look at it, and this is not a 30-minute chart out here, but it says we would be going substantially higher inside of the S&P 500. And there's not anything, when I say anything, I mean nothing, to suggest otherwise at the moment. Here's the market breadth on a 60-minute of the S&P 500. It had a bearish crossover that was very short-lived. It lasted from 1 p.m. yesterday until about 9 a.m. this morning. Got back to the bullish side of the trade out there. There's just, other than that seventh wave move, I mean, it doesn't look reliable to me. There's just not anything that says you should be short these markets. We gave you the figures yesterday that said, okay, maybe if price closed below certain levels, it didn't. All that happened were those levels were tested. Let's go out to Connecticut and speak with Steve. Steve, thanks for calling. Thanks for holding. And how is the cold weather in Connecticut today?
Oh, it's just wonderful. We got snow and ice today. Just another beautiful day.
So, is this a snow day for you? Is this a snow day for you?
Yeah, well, my son's home from school, so he's I'm babysitting him while I'm working from home. So it's a lot of fun. Yeah.
All right. Well, let's do this. Let's teach your son technical analysis. What better day than right now to start? Or do you have him watching Netflix? Do you have him watching Netflix right now? Is that what you called about? Was Netflix?
No, he's actually, I think he's watching YouTube or something right now. So
okay,
usually
cool.
It's Netflix or YouTube. He doesn't watch television anymore. So.
All right. Well, you called about Netflix. How can I help you? What are you looking at?
Well, I've been long Netflix for some time. I guess I got in around like in the 90s, and
nice.
I've held it over last year and the year before, and I'm looking at its sudden jump up right now, and then its earnings coming up, and I can't make heads or tails of it because it's gone insane. I mean, the charts on it, and they're growing more and more. So I'm just trying to make sense of the charts, and from everything I look at, it looks like it's going to hit another high from where it's at now.
So. What's your concern though? What's your real concern? Is your concern that this thing has
exit strategy? I mean, I want to look for a decent exit strategy to cash out, but and the same token, I'm looking to see if it will break to the next step up into like the 240, 250 range, somewhere in that area.
Sure,
towards earnings and whatnot. But it's all speculative,
Yeah. So here's my experience. My experience is that when something of significance when something's going to make a significant top, and look, first of all, congrats to you on being inside of Netflix in the 90s. It's at 220 right now, and you're doing the right thing, just analyzing the chart out here. There is, and you're in this for the long haul. This thing, as we speak right now at 1:25 in the afternoon, unless it's closed under 191 bucks, I wouldn't be worried. I'd be sitting through this. When issues make significant tops, they typically, what they do, kind of like in a blow-off fashion or something, they typically move higher with less relative energy. My screen here paints these black lines, and they don't mean anything. They don't mean anything until you see either the bearish show up, some type of bearish reversal signal, and then you have to see it close below Stevie's red line, which we haven't seen since September 2020. of 2016. And that 191.14 level, and this is a monthly chart that I'm looking at, says that this, I don't have any indication when I take a look at Netflix to suggest that it wants to do anything than continue to move higher. Now, that is the bigger picture out here. If this thing was going to pull back and I look at a weekly chart, I would be targeting the week of July 17, 2017. That high is 191.50. So it sort of gets right into that same 191.13 area that we took a look at, using my red line. So do me a favor, just hold on through the break. I want to make sure I've answered all your questions, and I'll just take a look at a couple other elements about this chart here. We get back from this break. We're going to go up to Connecticut, and we'll try to finish off Netflix with Steve. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with Steve in Connecticut. And Steve, during the break, we're taking a look at Netflix. Of course, that's not the screen shot that you're seeing right now. During the break, Steve, I just went and looked at it to try to find anything that I could as a leading signal technical indicator to say, try to come up with a reason, take the other side of the trade. Why would I want to try to short this stock? And I couldn't come up with it. And, the NASDAQ 100, the NDX, This is my projection. My projection says that the NDX 100, which Netflix is a part of, I have a price target longer term, and if you're in at 90, you're a longer term thinker, is 88.45. That is where I believe the NASDAQ 100 is headed to. I have a hard time believing that Netflix would totally fall apart if, in fact, that is a correct price target out there. So I just don't see a reason to sell it. If you sell it, what are you going to buy? You know, what do you?
Exactly. There was one event that occurred. It was last year. They issued a whole bunch of stocks and bonuses to all the people in the company, all the CEO, CIO, CTO, those people. And they registered it, and they had to register it. You know, when they get their bonuses, they have to register it. It's a publicly traded company. When that happened, after that caught wind, like I guess that someone caught wind of it in a hedge fund or somewhere else, and it spiraled out, the news. Ever since then, the stock's been parabolic, going straight, shooting straight up. And I think they kind of let the cat out of the bag for the fourth quarter earnings. But that's just my feeling on it. It's definitely a roller coaster ride of a stock to go into, but I mean their growth is just phenomenal. Everyone's cutting cables, cutting the cable television and watching Netflix.
Sure.
And if you get rid of Netflix, there's really not that many other choices out there. That Amazon, Disney, they don't have the content. They don't have what
sure.
Netflix has right now.
Sure. No. Look, it all makes sense. And even though it's been a roller coaster of a ride, I bet you every single person that's listening in right now would love to be on that roller coaster with you at $90.
Yeah. Well, I'm lucky at this time. I'm blessed. So I can't say that about my GE stock.
Okay. Well, hey, that's what this.
Yeah.
This game is about having some winners and losers. Cutting your losers, not cutting your winners. So stay with it. All right, my friend.
All right, thank you very much for all your help, and I really appreciate what a great job all you guys do, Tom and everyone. I just, you guys do such a great job. I really appreciate all the help.
Well, thanks. We'd be nowhere without you, so thanks so much for listening. All righty. You bet. So there were requests inside the Tiger's Den earlier, so now I'm going to go back to those since I think we got through stuff. And the first one was SU was the ticker symbol. So let's go take a look at SU, see what that actually is out here. And again, we'll just start Suncor Energy. And I'll just give you my take. The nice thing about this set of charts here is we can take a look at 3 different time frames, know if price is above resistance areas. And we take a look at daily, it is. That would be 38.09. You're at 38.23. It hasn't closed above 38.09. This is a profile that's been around, and it's a bearish profile. Bearish structured profile means the center of the box at 37.80, closer to the top, 38.09. Closing above 38.09 today would be a nice bullish message for Suncor. You're above a weekly profile, which also is a bearish structure. You cross through that on Christmas, December 25th, the week of December 25th out there, and you're above the monthly. If we just look at the monthly out here, this gives us the bigger perspective of what's going on. We can see that where price is likely headed to right now in Suncor, I would just choose the most recent swing point. So June of 2014, 43.49 to 38.29 is a target. There is an A to B equals CD pattern. We can draw that in, and then we'll go take a look and see if I got to put the right button. We can go see if it actually passed that B point with volume. Do you have to pass a B point with volume in order to complete the A to B equals CDT upside? The answer is absolutely, positively no. You don't have to. It's just when you do it, it just gives you more conviction. That's all, more belief. But it doesn't mean that it doesn't continue to move higher. The swing point was 52 million in December 2016. It was passed with 58 million. So you have a confirmed A to B equals CDT upside. So longer term, always good to understand the longer term picture that'll help you to trade, from an intermediate term standpoint, is 43.04, 1-to-1. Likely, it's going to find resistance at the 43-ish level, and then it'll find a way to bust through that area. And then it's going to go ahead and head up into the March of 2011 timeframe at 48.53. So that's my take on Suncor. Short term, so to speak, on the daily chart, and long term. Looks like a nice little setup there. So best of luck if you are inside of that trade out here. Can we take a look at the VXX? We can. What is it that I'm looking for would be my question. Throwing that on this chart here probably isn't going to be helpful out here, but let's just take a look at it. This set of charts here, you know what I don't know is what you're looking for on the VXX out here. I don't know what you're looking for. I think that maybe to assist you with that trade, and let's go back to Robert's comment about the fact that the spot volatility index was above its 50-day exponential moving average. Let's go check in on it. And the 50-day, and it is, the 50-day is 10 1/4. And Robert, I'll say with regard to this, I can't necessarily make heads or tails of it either. You know, what's it doing, continuing to sit up above the 50-day? It does happen. Typically when it's above that level, you see some market carnage. We're not seeing carnage out here. And maybe to go back to like the VXX, I suppose the biggest pattern dudette that I can share with you would be this then, if you're just looking for patterns out here. I would be taking a look at the VXV instead of the VXX. And what I would be doing is I'd be dividing the spot VIX index by the 3-month. That is the VXV. That's the indice that we're looking at. It's not a ticker symbol out there, or it's not an ETF or something like that. But the interesting thing, and I noted it just before I came on the air, and I didn't catch it this morning, was when the other aspect about the spot volatility index is that when it is equal to or greater than the 3-month out there, that has been signs of a bottom. And if you take a look at, and what you're looking for, and yesterday that didn't happen. Yesterday, if you took that percentage, it got up to 97%. Let me make sure. Yeah, 97% was what it got to. And I say it needs to be equal to or you know, it's got to be 100%. 90. I'll cut it some slack out there. But that's another sign of a bottom. So you put that together with a one-day rate of change of 10%. The market is actually doing what it's supposed to be doing. And you got to be, you know, pay attention to those 30-minute charts out here, or don't pay attention to them. If we take a look at the NQ, where that really gave the best signal, so to speak, on a move to the downside yesterday, you know, it's only in wave number 6 up potentially 7. 7 was yesterday's move to the downside out here. But, you know, it's tested its price oscillator. Did that earlier today at about 11:30. Looks like it wants higher price. Looks like it wants to go back to its highs. And if it takes out those highs, it says much higher prices to come. This is just a very significant bottoming pattern. When you push lower, you go ahead and you make that retracement, which it did into the open, pushes then lower after that, and it doesn't make a lower low. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. One of our requests earlier was to take a look at Bitcoin, and yesterday I was able to post the actual Bitcoin, not the futures contract, in cash, and I tried to do that again earlier, and my file somehow got corrupted, so I've got to figure that out. But what we can look at out here is we can look at the Bitcoin futures contract. This is a 5-hour chart that we're taking a look at. This is the CBOE version of it, and what we have right now is we have a swing point from a 5-hour chart out here that was taken out. That was at the 10,600 level. As long as price on this equity futures contract stays below 10,600, it's at 99.70, then what you have is an A to B equals CD, or potential A to B equals CD pattern. To the downside, it says 61.30. So that's another 3,700 or so to the downside. That's about the best that I can provide you with right now. Again, I would be watching 10,000. What happens if price closes back above 10,600? Then we don't necessarily have a price projection of the 61.30 area. So that would be the level that I would be watching. That's a 5-hour time frame chart on it. Let's go back to some of the requests where folks did let their fingers do the walking. And the first one came in from the golf guy. Not sure if your prior analysis SB can be used as a opposite for the TVX, meaning it isn't going up anytime soon like the S&P. But it can briefly take a look at the TV. If we just take a look at TVIX, so that's one of the VIX-related products out here. And let's go back to our 3 time frame chart, TVIX. And of course, the TVIX or any of those products, they're really traded off of the futures contracts, not the spot volatility index. So it means if you take a look at it, and I don't know what that mix is right now, but you've got to go look it up. Okay, you just have to look it up. It's going to be some portion of February, some portion of March with regard to what that is based on. Or at least it should be. I believe it is. Many of them are. I don't see why this one would be any different out here. So TVIX is trading at 495. If we take, and you just need to take a look at that mix. But if I go back and take a look at TVIX and try to discern, what you might be looking at, to me, this is just simply the worst absolute trading vehicle you could ever spend any time on. Now, that'd be different if you are a real short-term trader during the day, like Tom, and I saw Tom had who writes in and asks about that, who is, you better have really fast fingers on this. A number of reverse splits that it's done. If you go back, this says because those reverse splits, if I can figure out the amount that this would have sold for a share price of $27,292,500 at the actual high out there. So it's just basically god-awful. I don't know if I can. That's my opinion. So you don't have to believe me. But, yeah, just god-awful other than really intraday trading. And this is the 2-time VIX short-term exchange-traded note, something else I really hate, exchange-traded notes out there. But it doesn't matter. I will say I personally, you can kind of get a feel, I don't trade this vehicle. So because I don't trade this vehicle, I don't spend a ton of time on it. To be able to really give you great information, I like to give you great information out here. And I just so I'm gonna pass on this one. Just really trying to, golf guy. I'm just gonna try to pass on this one. I think there are better things to risk your money with, to trade with out there. That's just my thought. So hopefully that helps. Tom was writing in, and he writes, "Good afternoon, Steve." So we'll say good afternoon, Tom. I just went long on the USLV this morning at 1184. Wondering your thoughts on silver. I love silver. It is called high ho silver. What does Stevie like about silver so much out here? Well, it's really all the metals, but specifically with regard to silver, is I like what it did yesterday, Tom, and what it did actually, quite frankly, back on this day here. This day being the little doji candle on January the 11th. That was, I think, January 11th is probably the date that subscribers and I added to our already long positions inside of metals and mining. But whenever the price oscillator, this daily chart, gets above zero, and price comes back and tests Stevie's red line, as it did, bounces off of it, that's just your buy signal. It's another momentum indicator tool move out there, and is your buy signal. And so, Tom, the USLV, which is a 3-time ETF out here, as long as it holds 1711, then you're inside a good trade. If it closes below 1711, you've got some type of pullback. I and subscribers are in this for the long haul. The long haul. I don't mean long haul. I mean long haul out there. So I like it. I don't know if you're trading this intraday. If that's what you are doing, like you do many other vehicles out there. And if it's intraday, then we have to start. You're trading it. We have to start taking a look at shorter-term charts, like the 30-minute out here. So let me just do this for you, because you need to know what the underlying instrument is saying. And let's just go take a look at the silver contract, and let's go look at a couple of different sets of TAS profiles for you. And that's going to be 30. So let's go take a look at silver out here, and levels that you want to keep an eye on. Again, I don't know what your time frame trading is, but the 30-minute chart is back to bullish above 1716. So that's a key area for you to watch. So that looks good. Suggests to me that price is headed to 1728 out here. That's a 240-minute profile, the bottom of its box right now. But probably the profile you really need to be paying attention to from the longer term. So that was kind of your short-term stuff. From the longer term, and to know that you are in a trade that you want to stay in, just like Steve in Connecticut got into Netflix out here, you want to see silver bust through, close above 1732 or 1748. Those are the two levels of significant resistance. And Tom, if you see a close above that, hold on to that puppy. No selling it. You'll say you got in at a pretty good price out there, because, silver's headed to 22 bucks over time out here. At least that's what it looks like today, January 17th. So thanks for writing in. Best of luck with that trade, and maybe it'll turn into a investment, a nice one for you. All right, so that's all of the questions that I see that have come in. If there is something else inside of the Tiger's Den, would you be good enough to just go ahead and repost it in there for me? I'd appreciate it, and then I will get right to it. Otherwise, if we just take a spin here and take a look at the markets, try to figure out what else we would take a look at. Well, some I'm sure asked about gold. As long as we covered silver out here, what do we think about gold? We take a look at Goldilocks. Gold gave that same buy signal. Let's see if it was January 11th out here like silver. It was January 10th. So it would have been January 10th when we added to our positions inside of the metals marketplace. Gold looks like it's headed back to the 1365 area. That's a previous swing point. It's headed beyond that as well, or looks to be headed beyond that as well. Natural gas. Let's go take a look at the natural gas contract. I've got some subscribers that are in it to win it. That is beginning. That the UNG is beginning. The UNG is beginning to roll over into the March contract out there. Let's just take a look at the March contract. If you're going to stay in there, what you want to see is price continue to close above. Let's see if I can get this out here. Stevie's red line, $2.97. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So a great question was posted in the den by Maria, and she asked, Steve, long-term for gold, are you having in mind what happened back between January 2016 and July 2016, where we saw a nice move to the upside out here? And she's really coming back into where my cursor's at here. Gold was around 1046, moved higher into the 1300 range out there. And if you're asking, do I think that it's going to be that equivalent, that A to B equals C to the upside, the answer is no. I'm looking for something much, much more than that, if I'm interpreting your question correctly. Let's go back to Steve let's go back to Steve's trade in Connecticut in Netflix. Let me show you a pattern here. Again, I'm looking at a monthly chart now. It typically I've got a red line. Right now it's a black dash line. It's the same on this chart as Stevie's red line. Take a look at the the bottom panel out here. This is a monthly chart. I want you to take a look at the price oscillate on a monthly basis that once it got above zero, which it is, remember I gave Steve a figure of around 190 and change out there. And so that's the first point in time when you would maybe be concerned about a retracement in price inside of Netflix. And so when this longer-term price oscillator, got above zero. It basically was off to the races. You got to be concerned sometimes when price violates that area. But I just want to begin there because, you know, in this case here, if we had been following Netflix, instead of being in at 90, we've been in about 25 bucks out there. That would have been the price. If we come back and we take a look at gold right now, I'll just use a different chart. I'll throw up a different monthly chart. We take a look at gold, and you take a look at that price oscillator on a monthly basis just above zero, look where we are. We are right now at the beginning. The last time that we saw that on a monthly basis inside of gold was back in 2002, 2003. And there, price ran from 305 up to 1,900 bucks. That is the move, Maria, that I'm looking for. I'm not looking for a $50 move, a $100 move, a $150 move, a $500 move. We're looking for gargantuan moves over the long haul. Maybe this is our next Netflix. Maybe not. But right now, it looks pretty darn bueno. Folks, stay tuned. Your favorite polar bear and mine, David White, is up next. Yeah, and Dano, that would be a huge A to B equals CD to the upside. Take care. We'll see you on Terrific Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.